Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you feel value has been added in this video, feel free to smash the like, ring my bell, hit subscribe if you haven't, and also share your thoughts in the comments or on Twitter. Let's start off with the news. Bitcoin Lightning Labs raised $70 million to announce Taro stablecoin protocol. I think that, in my opinion, that will help significantly allow Bitcoin as a form of money transfer, especially to third world countries or developing countries. If you think about how much it costs to send a Western Union for people who are live in the United States, for example, and sending money back to their families in a developing country, it's very expensive. At times, can be up to 10 to 20%, and so this will help a lot of those type of transactions, and also helps with Bitcoin adoption. So very bullish news. Intel launches a new Bitcoin mining chip called Blockscale. And they're selling this chip as a standalone unit, not as a Bitcoin mining board or a Bitcoin mining machine. So vendors, OEMs, will be able to put together their own systems. So, and it's more energy efficient than anything available in the market right now, to my knowledge. So, more bullish news for mining the remaining, 2 million Bitcoins that are left. All right, let's dive into the charts. And we need the mouse highlighter so you can see where my mouse is. Here we go. We still have the ascending triangle here. And in the last daily chart, in yesterday's daily analysis for Bitcoin, I mentioned, by the way, this is TradingView 1 day time frame. In the last analysis, I mentioned that Bitcoin would likely chop around 46K with a possible range of, between 47 and 40, what was it? I can't remember now. But basically, it did exactly that. It wicked up to around 47, dropped back down. 47, and it's the support. I meant that it would hit support roughly around 45.5. Yeah, so it literally did wicked up to 47, around 47, and wicked down just right in this support of the ascending triangle. Sometimes I'm just amazed at how these patterns come together. It's just weird. Sometimes I think it's more like astrology, these charts and stuff. But sometimes it's cool how it works out. Anyways, it dropped down to here to support, bounced back up. It's currently right just below the 46K support resistance line, green line here, and it's at 45.9. When I prepped for this chart, it was above this line. So it remains, the current candle is bearish compared to yesterday. It's bearish, and it's sitting right between the top of the Bollinger Band, which is at 48.9K. Up here is 48.9K. And the middle of the band, it might be hard for you to see, but there's a blue band right behind these words here. And that band is the middle basis, and that is a 44.5K, right around here. There you go. Yeah, it's right around there. And the bottom of the Bollinger Band is at 40.1K. So right there. And the bull market support band, gray ribbon here, the current candle remains above that. And the bull market support band currently is roughly around 44.4K. The tip, they kind of merge. These two lines kind of merge together and create a point here. Additionally, it's still above this 50-day moving average here. So that's good. and it remains below this 200-day moving average. And in order to be more bullish, it has to break the 200-day moving average. Not has to. It'd be nice. And the 200-day moving average is currently at 48.3K, right around there. Hasn't changed much. It's pretty much going horizontal. Volume continues to be below the moving average. The moving average is this white line here. Here's the current volume, right there. The white J line of the KDJ, it was curving slightly up, and then it bent sharply down, totally flipped directions, and it's currently at 37.2. Well, that's when I did this chart. Below the blue K and the red D lines, all three lines are trending down, with the white line trending down a little bit sharper. Initially, it looked like it might have been able to continue to go up and penetrate the blue and the red line and create more bullishness, but doesn't seem to be the case. So I give that a bear. For the white MACD line, it's continued to trend down slightly as the red signal line curves slightly upward. So they're going to meet. The white line is descending faster. And so it's going to meet probably within 24 to 48 hours. And you can see the current histogram bar here is tiny. It's like barely a histogram bar. It's like a line. And that's because the two lines are so close together. The histogram bar measures the distance between the two. When the white line is above the red line, it's bullish. When the white line is below the red line, then it's bearish. And that's the 21st consecutive bullish histogram bar. But if it continues, it'll print probably the next one will be a bearish histogram bar. And it's currently at 1,483 for the white MACD line. It's still bullish right now as the print is concerned. At the same time, it's very bearish trending. Down below, the red RSI line flipped down to, you can see here, it was curving up, and then now it flipped down. In fact, all three lines are going down. The red RSI line flipped down to 58.35, gave that a bear. Remember, 50 is the middle mark, kind of neutral zone, if you will. Anything above 50 is it's on the upper half, and for RSI, I believe 80 is the 70 is the start of the upper range, and 30 is the start of the bottom range. For the blue cumulative volume delta CVD, it also flipped the opposite direction, going down. It's currently at 1.82 million. I give that a bear. The momentum or MOM indicator continue its sixth day of dropping, so losing momentum. It's dropped to 1,306. I gave that a bear also. Overall, we'll take a look at max pain and Heatmap and all that stuff in a little bit, but I gave this chart an overall 2 crabs and a bear, and that's a change from 3 crabs because there's more bearish indicators. And if this trend continues and it breaks below this ascending triangle support, and then it'll head towards the bull market support band, and potentially could go back to around 44K here as they test this area. That's what this chart is saying, but it could also go back up and retest this area up here where the 200-day moving average is, or the ascending triangle resistance is up here, and that's roughly around 48K, 48.1, 48.3. So summary here, that's basically what I typed in the summary here. So let's look at the other charts. Here are the upcoming max pain prices. Today is 46K. For tomorrow, the 6th is 46K. The 7th is 46K. The 8th dropped down to 45K. The 15th is 46K. And here's the heat map. I'm gonna start sharing more the zoomed in view so you can see more organic supply. So here's the price line right here, and what's above is the supply. People who want to sell bitcoins. Down below are people who want to buy it. So demand's down below, supply's on top. So seeing these lighter blue shades will help you see more organic supply up here and organic demand down here. And zooming in gives you a better idea about these small walls that, if zoomed out, they look like nothing. So you can see here right now we got a sell wall up here, potentially a spoof wall because it changes. You see that it moves here, price goes up, it moves up, changed. So it gives you an idea of how things are moving more close up. We got some buy walls down here. More than likely they're spoof walls. But the important part is the organic demand down here, the lighter blue shades, and organic supply up here, the lighter blue shades. And then you can see spoof walls too. And zoomed out gives us a better view of the big sell walls on top and the buy walls on the bottom. Sell wall at 50 is still there. Not much down here as major buy walls between the current price position and all the way down to 35. 35K, it's not a big wall. It's decent, it's like kind of tiny to average. At 100, what is it? 100. Let me see here. Yeah, that's 185 at the 35K mark. 32K mark is 465 roughly, and 30K mark. This big wall here has been diminishing in size. It's currently 390 something. Let me see. Yeah, it's literally 390. Yeah, it's changing. It has reduced in size significantly, while this one on top is increasing in size. 25K wall is still there, and then the 20K wall, I rarely show this one, but it's still there. So gives you an idea. Remember to leave some dry layer down as it goes into the low 40s and upper 30s, but save some dry powder, some money to buy it in case we have a market crash and it goes down to the low 30s and upper 20s. Always have dry powder to prepare for those moves. And for the liquidation levels from High Block Capital, we have an excess of shorts here at negative 1.01 billion, and the negative just means it's short. If it's positive, then it's long, excess, and that's the cumulative liquidation level delta. So here are the these levels up here are the shorts. As price move up, they get liquidated. Here are the long levels. As price moves down, they get liquidated. The money from the open interest in the shorts levels here minus the open interest money in the longs, you take this, you track that, that's what you get here. So it's a small amount, not a big deal as far as where could it, shift the direction of the market or cause someone to take the count position to go long and force the price to go up. In my opinion, not really. When it's around 5 billion shorts, then yes. Or like 9 or 10 or 11 billion longs, then for sure. Yeah, but this one, kind of, not a big deal. And that's pretty much it for our Bitcoin daily analysis. I appreciate your time. Feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section. Remember, leave some dry powder. A lot of headwind ahead, and the market could tank and crash at any time. I'll see you in the next video for Terra Tuesday. Peace.